Cathie Wood has just cleared up any doubts around her Tesla bullishness. In this video, the Tesla investor explains why she recently let go of some Tesla shares, and why this doesn't prove that she's any less of a Tesla bull.
22, 23, right. 24. We actually delay ours by 1 year relative to Elon, so maybe it should be 2 years. But here's where we've learned how important Tesla's proprietary data is. It's 5 million robots around the world. Cruise didn't have anything like that. It had hundreds. 5 million robots around the world collect data every day and send it back to Tesla. Tesla has more corner cases, which means disengagements, accidents, information like that, than all the other companies in the world combined.
You've sold Tesla shares, and it's it used to be the #1 holding, I believe, in your ETF. It's now number 3. You've sold about 20 million shares.
Yes.
Why?
So, well, whenever it goes up, it was up about 150% relative to our other names, many of which had not moved. So we will always recycle that way, take profits. And
Tesla is the clear leader in the global EV market up to this point, and although the company is facing a tidal wave of new competition, its market cap is already pricing in a tremendous amount of long-term growth and huge successes in ventures outside of auto sales. Tesla's stock movement this year has been eye-catching. However, the possibility of Tesla maintaining significant market share in EVs, as well as the success of its new business ventures, ultimately depends on investor sentiment. It will also depend on the plethora of Tesla projects that are waiting to hit the market. Today, Cathie Wood shares her opinion about Tesla and why she remains ever so bullish on Tesla as a car company.
You would think it's going to affect one of your top holdings, and that is Tesla. And we've been hearing some commentary from the company that is not that positive. It's fallen to third in your portfolio. Is that why?
So what we did earlier this year, it was especially in July, summer months, we looked at Tesla up 150%, and many of our multi-omics names in the life science space, they were negative for the year. And this is portfolio management kind of 101. Huge profits there, losses here. Let's do some rebalancing. And so we did that, but we did not sell after their quarter. And we did hear Elon loudly and clearly, and we had been anticipating it. Consumer demand is weak. All that Tesla's price cuts have done is offset the interest rate hit. So really, the monthly payments haven't gone anywhere. Tesla will continue to cut prices because it can. Its technology costs are falling, and it's profitable. You'll notice that the GM and Ford have basically pulled back on their EV strategy and said, we can't do this unless it's profitable. Well, this is chicken and the egg. It can't be profitable for them, just like it wasn't for Tesla, until they scale. So if they're not going to scale, they won't be profitable.
Analysts have claimed that the EV market is pricing in at about 30 to 40% growth in earnings annually on average over the next decade. And this will require the development and launch of products like autonomous driving, semi-trucks, and low-cost sedans. Tesla will only improve its current valuation if the global EV market continues to grow rapidly, and it is already starting to do so. Hey guys, welcome back to Tesla Tomorrow. Cathie Wood, together with ARK Invest, has been a strong supporter of Tesla. However, lately there has been a bit of room for doubt. ARK Invest's Innovation ETF has sold roughly 1 million shares of Tesla in the past 6 months, bringing what was once the firm's top holding to its third largest holding. ARK Innovation in June owned roughly 3.5 million shares of Tesla, weighted at more than 12% of the fund. However, as of November 14th, the EF owns about 2.6 million shares of Tesla, worth less than $590 million, and weighted at 8.5% of the fund. This sale of Tesla shares has triggered investors' concerns and left many wondering whether or not Cathie Wood still remains an advocate of Tesla stock. Before we carry on though, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. In defense of Tesla's recent reduction in its holdings with Tesla, Cathie Wood gave a very convincing reason as to why she let go of some of her shares. Wood reiterated that when Tesla shares move up relative to the firm's other holdings, ARK trims its holding and redeploys the profits into other companies. And this time it was up about 150% relative to the firm's other names, many of which have not moved. Additionally, Cathie Wood also reiterated her bullishness on Tesla, stating that the autonomous taxi platforms are the biggest AI projects in the world, and therefore she thinks that Tesla is the biggest AI player. She further noted that so long as ARK is right on this autonomous taxi opportunity, the firm's Tesla holding will remain in the top 5 in the fund. Cathie Wood and ARK Invest have become something of a poster child for Tesla. ARK has been a prominent investor in the company for years, and this year the firm raised its target to $2,000 per share by 2027, an increase of roughly close to 10 times the stock's current value. The basis of this outlook, according to ARK, has something to do with autonomous taxis and AI. ARK has said that the current robotaxi industry will be bringing in around $10 trillion in revenue by 2030, and thinks the firm and Tesla itself is in pole position to dominate the market. Now, programs that have software or ongoing subscriptions like FSD are especially important for Tesla, as they are expected to become more profitable. Additionally, Tesla is working to improve manufacturing efficiency and reduce cost. Specifically, ongoing design improvements with batteries should reduce costs and help to improve profitability. Tesla's new product launches will allow it to take advantage of this expanding market, and let's just say that the car company's current share price does not really reflect its long-term growth opportunities. Tesla will likely continue dominating the EV market, and seeing that the industry is growing at an incredible rate, it will also benefit greatly in terms of sales. Cathie Wood once cited a sentiment from the American car rental company Hertz, which stated that its EV maintenance costs are more than 50% lower than gas-powered vehicles cost. According to Cathie Wood, EVs have more miles traveled and are rising faster than expected, destroying oil demand. Cathie Wood had previously said that more people will key into EVs and the demand for oil is expected to drop in the future. Wood believes that the EV market is growing at a tremendous rate and is becoming more evident when we look at things like how people are going to use EVs in the coming years. The Tesla bull also believes that the possible shift to battery-powered automobiles is anticipated to drive the EV market. It's expected to grow from $287.36 billion in 2021 to over $1,318.22 billion in 2028, rising above the 2020 drop caused by the pandemic. There is already high demand for EVs and more is anticipated in the coming years, so imagine what's going to happen when Tesla releases some cheaper EVs, say like one as low as $25,000 or $30,000. Its demand would likely be through the roof. With this low-cost EV, buyers are more likely to go for Teslas instead of other cars, considering the lower cost and higher efficiency. Global reputations on emissions and mileage are also expected to be potential catalysts for driving the growth of EVs. And while competition is rising, it is expected that Tesla will continue to have a significant presence in global markets. No doubt Tesla stock is still performing below expectations, but there's a lot to anticipate, especially since the car company plans to launch a number of new products later this year, and next year as well. It maintains a significant market share, even more than its competitors as they enter the EV market. But this is not just about EVs, it's about Tesla's new business, including solar, insurance, and AV technology, and several other projects are in the works like a humanoid robot and a robotaxi service too. Going by the recent sales of Tesla shares by ARK Invest, do you think Cathie Wood has become bearish on Tesla? Let us know down below, and if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.